It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast for the last Monday in January. After a weekend of potentially chasing real estate for some, maybe you were searching on your phone, still on holiday for property. Not uncommon. So many people take the whole month of January off these days and head back in the first week of February. And if you put pen to paper in a property contract, maybe, just maybe the start of March sees you in your new home. Well done, if that is the case. It is a Monday, January the 26th. And good morning, Denise in Perth. We got your email. You wanted to make a comment about one of our podcasts talking about the cost of living being cheaper in Vietnam. Yes, we've also featured other countries, and it's for that very reason why other Aussies are heading off to live somewhere other than Australia. Now, Denise, you made the decision to rent out your property and move to Da Nang in Vietnam, which you said that you have visited before. It's an easier lifestyle, more simple, and you divorced about 12 months ago, and your ex is still in Perth. Friends of friends are there, so it's now too small for you, and you wanted a complete change. Denise, you don't do anything by halves, do you? Now, please do me this favour and email us back when you get settled in Da Nang. It sounds like we need a follow-up email from you. And if you are listening identifying with Denise, not the part about her ex, but wanting to live somewhere cheaper and more simple, well, we are only an email away. We'd love to hear from you at myrealestatepodcast@gmail.com. Coming up next, we are back and it's the last few days of the summer series.
You're listening to the Summer Series on the Real Estate Podcast.
I think a lot of people look at some of these other agents and say to themselves, how on earth are you able to sell real estate? I mean, I know some of these people directly. I won't tell them that, but I do think, how do you sell real estate? Some people, when they see that, they, like you, they say, yeah, I can probably do it and maybe a better job. So this is a sort of a gateway, isn't it? How people get involved in the first place.
Yeah, that's right. Exactly. I didn't know that was going to ultimately happen. Mum and Dad have always been in real estate. But yeah, I came in through the real estate avenues in a different way slightly. Yeah.
So let's have a look at the median house price, and I can see that it is sitting there at $605,000. The growth in your market, gee, that's nearly 13% that has risen. 23 days on market for the houses, rental yield of 4.6%. So there's a rental yield to be had on those houses. What do you actually get, Sharon, for $605,000 when it comes to a house for those that have never been to Gympie before?
Well, typically you'd be looking at a 3-bedroom, 1-bathroom property for that sort of price, maybe sitting on around about 1,000 square metres.
So, Sharon, tell us a little bit about the fact that you guys have been bypassed. Also, let me know how long ago that was and how affected has Gympie been as a result of that?
Yes, well, it had been a long time coming, and we officially were bypassed October in 2024, so just coming up to 12 months now. And look, we didn't know which way that was going to affect us, but when you look regionally around everywhere else, such as Mackay, Rockhampton, Bundaberg, they've all been bypassed. They've all succeeded, thrived, and Gympie is exactly the same. We have definitely seen an improvement, to be honest with you, because people can access Gympie so much easier. Gympie is quite a vast area geographically. So with this highway going through and having these off-ramps means that people are able to access the different parts of Gympie a lot easier than what they had been able to previously. It's been a very big positive for us.
All right, now let's talk about the fact that Gympie is reasonably close to Brisbane. What is the drive time? Sorry, Sharon, you might have mentioned that. What is the drive time between Brisbane and Gympie? And just give us a breakdown on, who is coming into the area and how many of those Brisbane people find it attractive.
Yes, well, with the bypass of Gympie and that highway, that new highway, it's made travel time from the Sunshine Coast and Brisbane so much quicker. So we're finding a lot of people coming from Brisbane's sunny coast. Drive time now is around about an hour 45 to Brisbane CBD, just under an hour from Maroochydore. So it's definitely helped us, real estate wise. People can see that they can actually drive from the Sunshine Coast, live here in Gympie and drive to their jobs on the Sunshine Coast and the same into Brisbane as well, because we are the last train line as well. Gympie North train station is the last train line on the city trains from Brisbane. That's also a huge bonus that we have here in Gympie.
So just tell us a little bit about the block factor. You know, somebody wanting maybe a larger block. They don't want to be so close to other neighbours. So is that a bit of a factor where you say they're moving from the Sunshine Coast and also Brisbane?
Oh my goodness, yes. You know, like down in Winnemanley, I was selling blocks of 4 or 5 square metres. Up here in Gympie, you can buy 1,000 square metres quite reasonably priced. And it goes up from there. You can have 1 acre, 5 acres, 10 acres. Yeah, people are just loving the lifestyle. The kids have got room, they've got space, they can put a pool in, they've got man sheds, they've got all their toys. It's all on their property and it's all still affordable here in Gympie. That's the thing. We are seeing the prices rise, but that it is all still affordable and that's what people are loving.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
Since COVID, I have only been eating with al fresco dining, where you've got some circulation. The one time that I veered from that was on Saturday with a friend who wanted to go into this restaurant with air conditioning. And I actually looked at it from the outside. A lot of people in this restaurant and thought, maybe this isn't a good idea. But I relaxed because I haven't caught COVID. And what happens? Bingo, we've got COVID. Right, let's go to Nicola Powell, Domain's Chief of Research and Economics. I'm sure that you're feeling a lot better than me, Nicola, this morning.
Look, I definitely am. I'm fit and healthy. I'm so sorry to hear that you are so unwell. And what a milestone, though, this in terms of you've never had COVID until now.
Yeah, I was saying yesterday that about 10% of the adult population haven't had it. So there are a lot of people, they're not really unicorns, but yeah, a lot of people haven't caught it. And I would think that these people are just being vigilant and being careful with, what they're doing.
It's interesting. My mum hasn't had it, but my dad has, and they are still together and they live together, and she never even caught it from my dad. So yeah, I think there are some super immunities out there for sure.
Great. That's a great story. Right. Well, we should have a look at the first home guarantee. Now, you guys put out a report, I think it was last week, and it's really, really interesting in terms of just how much time you are saving to now save for that 5% deposit. So let's go to Sydney and I'll let you explain that.
So when you look at the home guarantee scheme, it allows people to purchase with a 5% deposit and the government becomes the guarantor of the 15%. So it means that you're avoiding lender's mortgage insurance. Now, we know that when you're a first home buyer, saving for a 20% deposit is such a significant hurdle. And if we take Sydney as an example, and we're using the property price cap based on this home guarantee scheme of $1.5 million, to save for a 20% deposit on that $1.5 million would take just over 10 years for a 2-person household income. When you're looking at saving for 5%, it only takes 2 years and 10 months. So you're saving almost 7 years in terms of time it takes to save that all-important deposit. So it is a game changer. I think it's very much a game changer in a market like Sydney, which is extremely high-priced. You have to be highly leveraged to gain access to it. And I do think that this will fast-track many Sydney-siders' ability to purchase a property.
I also note, Nicola, that you also look at the other side of the coin, particularly, I guess, for Sydney and people wanting to get into the Sydney property market with the 5% deposit. Buyers will still face, you say, bigger mortgages and that risk that comes with the rising rates, potentially property price drops as well. So it is somewhat of a bit of a gamble, isn't it?
I think you have to make the judgment really based on all of the opportunities and challenges that a low deposit does offer. And I think that you have to remember that you're going to be looking for a much larger loan because you're only going to have 5% equity within that home. And also some of the other challenges, which is particularly poignant for a high-priced market like Sydney, is borrowing power is unchanged. So banks will still stress test serviceability. So repayments remain a very hard barrier for many households. You know, we've got that lump sum deposit as hurdle one, but then it's how can I service that repayment of that ongoing? And I think this is where it particularly becomes poignant in Sydney. And if you have a larger mortgage, because you've got a smaller deposit, that does mean more debt. And it's leaving, I think, households much more exposed to interest rate movements. So my advice is build in a buffer so you can be financially comfortable repaying that mortgage. You know, you have the scope to stretch that bit further if the cash rate does move higher. And we have to remember that the market is pricing more rate reductions. We're expecting another one in November, perhaps even some early next year. But we are expecting the cash rate to bottom out at some point next year, which may mean that we start to see rate hikes come 2027.
Yeah, I think the other side of it, okay, whilst we're highlighting just how much more money you are going to be loaning, if you look at the years saved for Sydney, which is 7.5 years, which you've highlighted, just imagine how much the market is going to rise in 7.5 years. So that is the other side of it if you can manage to get into the Sydney property market. Let's go to Melbourne and also Brisbane in terms of just how many years you're saving.
So when we look at Melbourne, the property price cap for Melbourne under this scheme is $950,000. And in Brisbane, it's slightly higher. It's $1 million. So we're, again, using those property price caps to calculate. Save for a 20% deposit, it's just under 8 years in both of these cities. But to save for a 5% deposit, you're looking at just over 2 years. So ultimately, the time saved is 5 years and 9 months in both of these capital cities.
Okay, so that is Melbourne and Brisbane. What about Adelaide and Perth?
So Adelaide's got a property price cap of $900,000 under this scheme. And to save for a 20% deposit for a dual, two-person household income takes 7 years and 8 months. But for a 5% deposit, it's just over 2 years. So again, you're saving a significant amount of time. It's 5 years and 7 months saved in Adelaide. In Perth, the property price cap is a little bit lower, $850,000. And actually, the average income in Perth is slightly higher. So the time to save for a 20% deposit on $850,000 takes 6 years, but a 5% deposit, it shoots that time to save under 2 years. So you're saving almost 4.5 years in that journey time to save.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
I got to say, thank you for some of the emails that have come through in the last couple of days. Hayley, Marianne, and Stephanie, thank you for your kind words to get better. And Don in Footscray in Melbourne, who listens every morning for his granddaughter, who he is trying to get into the property market. Don says, harden up, Craig, it's only COVID. I'm 73 and I sailed through it. Good on you, Don. You're a legend. They do breed them tough in Footscray. Nice to have you listening, and also let us know how you get on with your granddaughter, and thanks again for all of those messages. And good morning to you, Anthony. Welcome back to the Real Estate Breakfast. Yeah, it has been one of those weeks. As I say, you're in the thick of this with the First Home Guarantee Scheme, which a lot of people have been waiting to sort of come and arrive.
Yeah, good morning. Great to be here, Craig. And yeah, look, it's just about in every newspaper and every news run at the moment, different opinions and thoughts and pros and cons about this revamped First Home Buyer Guarantee Scheme that rolled out on the 1st of October. So it's a hot potato right now, no doubt about that.
So let's begin with a quick recap on how the scheme works for those that are still catching up with this and who is eligible.
Yeah, fundamentally, the scheme works where it assists first home buyers entering the housing market by allowing approved applicants essentially to take out a mortgage with just a 5% deposit. The scheme's been around in different forms since the Morrison government, but the revamped scheme announced by the Albanese government in their last election campaign and rolled out on the 1st of October essentially lowers the barriers to entry with two main changes. The first main change is changes to the price caps, quite significant changes to the price caps. So New South Wales capitals, the price caps changed from 900,000 to 1.5 million. In Melbourne, from 800,000 to 950. Queensland, 700,000. That price cap's gone up to $1 million. In Perth, from 600,000 to 850,000. Adelaide up to 9,000. Hobart up to 700,000, and the ACT gone up from 750 to $1 million. So those price caps have raised significantly. The other major change is there's now no income cap. So first home buyers on any incomes with a higher income stream, for example, can now also access the scheme. Essentially, the scheme now is a lot more accessible for a lot more buyers at higher price points.
Yeah, it's a total game changer. And as Nicola said yesterday, you know, the property price cap going up to 1.5 and the time to save, like, you know, comparing it with 20%, which was 10 years and 3 months. Now with that 5%, 2 years and 10 months, and you're saving 7 years, 5 months. I mean, I said yesterday, that is a phenomenal amount of time that you are saving, and you're in the market.
Massive change. One of the biggest challenges for first home buyers is saving for a deposit.
We connect you to the best real estate information across Australia. The Real Estate Podcast.